Undaunted by a market sell-off this year, ARK Invest founder and CEO Cathie Wood doubled down on disruptive innovation stocks and predicted that deflationary trends will continue into next year. Innovative trends like electric cars, artificial intelligence, gene sequencing and blockchain technology are highly deflationary, Wood said in an interview at the Forbes/Shook Top Advisor Summit at the Encore at Wynn Hotel in Las Vegas. She estimates that the innovation market currently has a market capitalization of $7 trillion, but will be worth $210 trillion by 2030. Wood has continued to stick to her strategy of investing in disruptive technologies and growth companies despite big losses for her fund this year, as many of her stocks have fallen from pandemic-era highs in 2020. ARK's flagship fund, the ARK Innovation ETF, fell above 60% in 2022, compared to a 25% drop for the benchmark S&P 500 index, as rate hikes hit tech stocks. The fund still boasts nearly 10% annual return since its inception in 2014, when Wood founded the firm. After rising to prominence and climbing almost 150% in 2020, its flagship innovation fund ARK is down 24% in 2021, shedding more than a fifth of its value, while the S&P 500 is up 27%. Assets under management of the ARK Innovation ETF have declined by $20 billion since 2021. Wood described that ARK has responded to market turmoil this year by focusing portfolios on our highest conviction stocks. She reduced her assets but put that money into her work, adding to her favorite high-profile positions like Tesla, Zoom, and Roku. The ARK Innovation ETF currently has 34 stocks, up from 57 at the beginning of this year. Wood thinks her fund will outperform the market again once the economic pain of high inflation and the Fed's rate hike subsides. Anyone betting against American innovation in the long run is probably doing bad business, she said. Wood has been openly critical of central bank tightening and raising interest rates, writing an open letter to the Fed on Monday warning of a policy error. The unanimity of the Fed's governors is worrying, she said, noting that the Fed and Jerome Powell think it's the 1970s. The current period of inflation is rather a function of supply shocks due to the coronavirus pandemic and Russia's war in Ukraine. There is extreme inflation anxiety in the markets today. No one is really betting big, everyone is cringing and cash is at an all-time high, Wood said. She worries that, given the brutal market environment this year, investors are too afraid of the innovation that's taking place, even though many of these disruptive companies are already turning into the new leaders of the next bull market cycle. She cited technological innovation as a key driver of deflationary pressures, as many of these disruptive companies are creating new opportunities for efficiency gains across industries. She expects inflation to ease with more consistent price cuts, especially over the holiday season, as retailers with huge surpluses are forced to cut costs more aggressively. If the Fed's rhetoric changes, with central bank divisions intensifying, or if inflation numbers ease quickly, we will likely see markets begin to calm down again, Wood said, adding that the worst fears about inflation have already passed. Her best advice to investors struggling with uncertain market conditions is to be patient and wait for a recovery. It was difficult to diversify as stocks and bonds fell, but both asset classes will rise as huge opportunities emerge once inflation concerns subside. She also reaffirmed her bullish outlook on cryptocurrencies. BTC 0.0% Bitcoin is indeed a monetary revolution. It is a very important insurance policy for countries where the dollar is not a reserve currency, like ours, Wood said, estimating that the price of Bitcoin will rise to $1.3 million by 2030. Bitcoin is currently trading at around $19,000 per coin.